Hi guys, so we are live now with everyone. So everyone from the previous sessions are going to, kind of go off and join in back again to the new session. Meanwhile, they come in. This session is particularly focused, on quant hedge funds and everyone who can, who is thinking of generating alpha, in crypto with their trading strategies and bots and algos. It's all for them. This session is power packed with people coming from Coinrule. So Ruben is here joining us. He's the head of trading at Coinrule. We got to have a lot to learn from you in terms of algo strategies that how do you strategize and how do you execute your strategies. We've got Daniele again with us. Daniele is the hedge fund manager with Diamond Partners and is having a really big vast experience when it comes to trading and hedge fund management. We got Edul, who's the co-founder and CEO of Mudrex, a trading algo platform for traders to run and execute their trading strategies. Has been a Y Combinator backed initiative, and really good to have you here. And finally, we got U-Zyn. U-Zyn's from Cake. He's the co-founder and CTO of Cake. We all know Cake DeFi. It's been running really well. People have been farming Cake, everywhere. So that's pretty cool. I'm gonna, kind of start off with, letting you introduce yourselves and also share your perspective of how important, algorithmic based trading is than to traditional, cases, and why is it important in the market? Why is it so important in terms of hedge funds and big institutions when it comes to big institutions? So I'll start off with you using.
Oh, hey, yeah. So let's start with a bit of my background. So I come from a tech background. So I'm a software engineer, and I was a cybersecurity. I am still like the cybersecurity enthusiast, and I started into Bitcoin since 2010 because that's one of the greatest application of cryptography that I've ever seen. I almost fell in love almost from day one when I read the white paper. Started mining and launched one of the earliest crypto exchanges in Asia back in 2011. I invested in Bitcoin and later Ethereum. Got into Ethereum pretty early and created some open source tools on that space before the tools were mature. And I've done various crypto and blockchain projects. And I was one of the first. I was the first Singapore Smart Nation fellow doing research on blockchain application for Smart Nation in Singapore. In 2019, I started Cake DeFi with my co-founder, Dr. Julian Haas. So for those of you not aware of, who not familiar with Cake DeFi, you can think about it as like an Asian BlockFi. So the goal of Cake DeFi is to assist users in generating cash flow while they invest or hold crypto in a most transparent manner. And currently we have more than $500 million worth of users' crypto assets on Cake DeFi today, and still climbing. And I'm also a lead researcher and CTO for DeFi Chain, where we're implementing a native DeFi on Bitcoin with no virtual machines, no EVM, no VM, any sort of VM. Every DeFi transactions are processed at the consensus layer. And I think this is going to be very relevant to Quant because a DeFi on blockchain, it means everything is verifiable, everything is open, everything's like an open book. There's no counterparty. If you want to write algorithm, you can do it in a very efficient and very open manner, and you can yield farm and you can arbitrage all that you want in a flash loan and all that stuff. It's all open and available. So I think DeFi it's very very designed for quant and large usage.
Absolutely. So let's move on to Ruben and see his perspectives and also a bit of a background introduction about Coinrule, if you can, Ruben, alongside yourself.
Yeah, thank you. I come from a financial background. So I started working in an asset management. Then I moved to a brokerage firm. So I have a wide and deep understanding of the macro financial environment. And in 2017, 2016, 2017, I started to dig more into cryptocurrencies. It's interesting because actually I got the first touch of cryptocurrencies in 2013, 2014. But because of my background, I was a bit biased by that institutional level of security, that global recognition that traditional asset class they have, and therefore I could not witness that potential at the time for cryptocurrencies. Everything changed in 2017 with the emerging new use cases brought by Ethereum, and there a new world basically boomed. I decided to go full-time crypto. I met the co-founders of Coinrule in 2018, and then we understood that the importance of creating an algo strategy in this market is really fundamental for two main reasons. One, this market is 24/7 open. So there is literally no way that you can catch all the opportunities that this market offers. When I was working in traditional financial markets, you could trade stocks. You knew that you should only check the prices between 9 to 5 in the afternoon, and that's all. The weekend, everything is closed. You close your position. You just plan the next strategies for the following week. This doesn't happen for cryptocurrencies. You always need to have in place a strategy. You always need to adjust in real time to evolving market conditions, and we see how quickly these market conditions change. So for all these reasons, an automatic strategy makes totally sense. On top of this, the market is even more complex. So we are trading in a market where probably Binance alone trades over 1,000 trading pairs. So you can see also the amount of data that you should look at any moment, even if you just dedicate for trading 1 or 2 hours every day, but still there are so much data that comes to you, and there is really, even in this case, no way that you can analyze all this data all together. So even for this, an automated strategy can do all these analytics for you in real time.
Absolutely agreed. Thank you so much, Ruben, for highlighting that. And moving on to Edul with the same thing. Edul, a bit of background about yourself and how Mudrex, kind of helps, also traders. Like Ruben said, it's meaningless to kind of consume all that data, all the time. And algo strategies are the way for kind of master traders and super traders to kind of execute their everyday move. So what do you want to say about that, Edul?
Absolutely, right. So I come from a background of finance, building product and tech companies, and with the unique insight of consumer finance and consumer behavior with whatever things I've built in the past. And the first time when I interacted with algos was way back in 2013 when I was in Deutsche, and I was building tools for traders at Deutsche to help them do better at trading. And I realized that to be honest, algo trading is the future simply because humans are very emotional, and those emotions get the best of us most times, right? Like 24/7 markets are a crazy part about crypto that magnifies this emotional breakdown, right? And that's what leads us to take emotionally undecisive and poor decisions, and which is what at the end of the day leads to losses, right? Like the retail trader is the worst performing asset class in the world. The reason why the retail trader is the worst performing asset class in the world is because in most cases the retail trader A does not have the system, B does not have the right tools to help them do trading better, right? And this is what we realized very very quickly. Again, something similar to what Ruben did in 2017 and 2018 when we were doing algo trading in crypto. The things that just started, Binance has just started to evolve, and we were trying to figure out how can we arbitrage between Binance and Bittrex and the 100 other exchanges out there. And we realized that there are no pipelines built for algo trading. So we first built the infrastructure. Then we realized that most users who want to do algo trading don't know how to code. So we built a no-code editor to help them do algo trading. And slowly and steadily, it eventually came to the realization that, okay, even in the case you provide these tools and you provide the infrastructure, some people just don't have the knack of doing trading, right? Because they are very emotional in nature, right? So, and actually a lot of people want to be hands-off. They don't want to worry about algo trading all the point in time, right? And this is when we realize that, okay, there is this marketplace kind of an opportunity available And that's what Mudrex is evolved into now. Today, what we do is we not only provide tools to good algo traders to create their algos, but we do the job of curation, we do the job of validation, we do the job of verification, and we then list them on a marketplace. And that
Absolutely.
marketplace is now open to any investor. And as an
Yeah.
investor, you can just go out and pick and choose, right? So what
Correct.
from algo perspective, what we think is that it's not only the trading part where the trader decides to create an algo, but the risk management that's also important for an investor. We take care of the risk management, the trader takes care of the creation, and that creates like a universal
Yeah.
platform where
So,
people can
yeah.
trade and invest.
Absolutely. Thank you so much, Edul, for sharing that. And Daniel being one of the most experienced, people with us, a trader by himself as well. Like, what do you think about making strategies execute in a algorithmic fashion? And do you use it yourself? And what would you suggest to other people also, coming in new, to look into, generating trading the methodologies in a trading system, set on into a platform that can support their trading strategies?
Yes, thank you very much. I founded Diamond in 2002 as a financial advisory company that providing quantitative strategies to banks and asset manager. And at the beginning, 20 years ago, when I was speaking about quant, I was watching like a witch. They didn't understand what I'm doing or what I'm telling to the people, to the investors. And so I made also 15 years of conference. The name of the conference is Quant. And we held the conference in Venice, and it became international because it's a niche, of course, but I suppose is the future in the investment field. Now in Standard and Poor in US, more than 70% of the trading are provided by algo trade, just not only to make strategies, but also to create a really efficient way to sell and purchase, reducing the impact in the market. The crypto is like forex in 70, when forex was a jungle, and there was incredible opportunity in arbitrage, and you could arbitrage manually, and in the crypto it's not more possible to make arbitrage strategy manually. You need, of course, to have an infrastructure, um, and with a very low latency, and basically you have to invest a lot of money to be efficient in arbitrage sector.
Yeah.
But there is a lot of uh, trading strategy that you can apply with a different level of difficulties. But from my point of view, I suppose that a normal trader, if has not a huge background like Zyn in developing and writing code, probably is better to invest in a quant hedge fund, like in the title of this panel discussion, because it's better to let the professional manage the money with algorithmic trading, and not doing by yourself, because there is a lot of risk, error in the code, or some doesn't consider a lot of risk that can happen, or
Absolutely.
a lot of
Absolutely.
situation.
Yeah, and like I think moving on from Daniel, and this
Yes.
is great for U-Zyn, because now what you just said, Daniel, is that the people who knew to develop and write code, all right, and wanted to take opportunities of the arbitrage and movements of markets, as soon as DeFi markets kind of developed and the total value started increasing, these smart financial background and technology background, fintech background people could now move to writing their strategies here and make use of flash loans and make use of the whole construct and framework of DEXs. U-Zyn, like, how do you want to add on to what Daniel also said, and the current, and also kind of explain or highlight the current situation in how yield farming is working from the background, and what is Cake doing in it as well?
Sure. Yeah, I think Daniel is perfectly right. There's a lot of opportunity on the DeFi space for Quant, and if you can develop strategies, there's a ton of opportunity there. I feel like blockchain and Bitcoin is programmable money, and DeFi is programmable finance, and Quant is about programming trading. So DeFi is perfectly designed to allow trading to program trading. Like, there's a lot of predictive model, and you can apply on DeFi, and you can do a ton of automated trades on DeFi because everything is open there. And like for certain traders, you can do active or passive trading on DeFi. Like for passive, you can generate a ton of yield with yield mining. So locking up your crypto and certain liquidity mining, and you get to generate a ton of passive income there. On DeFi chain, you can generate up to like 100 APY per year by just locking up your Bitcoin to up on the DEX on DeFi chain. And also, like for DeFi, a lot of protocols are designed with inefficiencies that are baked in. So if you are quant traders, you can see that all these AMM, automated market making spot DEX, like decentralized exchange, they are designed with inefficiencies baked in. So there's a ton of arbitrage opportunities if you have like system that you build that can monitor all these prices. A ton of crazy arbitrage opportunities there, like even for futures model and all that as well. So yeah, it's perfectly designed for quant traders.
Yeah. Absolutely. Moving on to like Edul, Edul, if you want to continue answering, some back to U-Zyn, and also like how you guys are, have been playing a part with the central exchanges. Are you guys to DeFi, and you wanted to say something U-Zyn as well?
So actually, the theme that I wanted to elaborate on is on both what Danielle and U-Zyn said. The problem is that not everyone should be doing their trading, number one, and the other problem is that not everyone has access to the right tools, right? And to solve that problem, and there are opportunities available both in DeFi and in the centralized world. In the centralized world, the common opportunities today are essentially trend following, momentum identification, right entry, right exit, and so on and so forth. On DeFi, there are just so many opportunities to do yield farming. There are so many opportunities to do simple basic arbitrage across AMM exchanges. And the problem is, though, that not a lot of people understand how to do it. And to solve for that part in DeFi, we are building something called as mesh.finance that we've just launched. In fact, it's right now in beta mainnet, where we are helping people, instead of them deciding and figuring out where should they put in money, we are partnering with strategy creators, we are partnering with quant traders who are able to create their algos and then put them behind low risk, medium risk, and high risk vaults, and give users a one-click ability to go out and launch those things. And that's the approach.
Something like robo advisory. Something as a robo advisory.
Yes, it's essentially a simple robo advisory in DeFi. On the CeFi,
I definitely need to talk to you more about that later. I definitely need to talk to you more about that later. But moving on to Ruben, and Ruben, like how do you see as a trader with the whole inception of DEXs and DeFi now? Did your strategy, like from last year to this year, has it changed? Have you been captivating the markets in decentralized finance as you did with the normal markets? The actual, if you rightly want to say, this is the actual decentral market, right? Like otherwise the trading was obviously happening peer-to-peer, but there was a lot of indulgence from market makers and and stuff. And now with AMMs and DMMs coming about, like, how do you think your your style of trading has changed looking into DeFi and DEXs? Has anything changed? And now do you also offer certain tools such as Edul, Mudrex to help people who are looking into DeFi as well and DEXs?
Yeah, sure. So the main point here that the strategies didn't change, but I think that new strategies came in. So the strategies that were working well before, they are still working well now. The difference is that thanks to DeFi, now we have so many new opportunities that are coming by, and so new strategies needs to be developed in order to catch these opportunities. So, for example, we were mentioning flash loans. Flash loan is something that or you are a very, very skilled programmer, so you are able to catch to analyze all this situation and to catch that opportunities. Otherwise, there is no way that you can seize that opportunity. With an automated algorithmic trading strategy where you can scan the market for yields, for arbitraging differences in pricing between pools and so on and so forth. And then once that opportunity is spotted at whatever time of the day, you can just launch the strategy and execute it. And bear in mind, these strategies are mostly, correct me if I'm wrong, but risk-free, because they execute literally within one block on the Ethereum blockchain. So these are basically the dream of any algo trader to be able to develop such strategy. So that's definitely what we are going to witness on the market. I would like also to reconnect with what Daniele mentioned earlier before regarding the quality of executions that hedge funds trader are looking for. So Coinrule is mostly a retail platform. So what we are trying to do is to allow retail traders to access advanced professional tool for their trading strategies. But also we have institutional clients, and we see the difference between the usage of the platform that these funds mostly have. What they are looking for is not advanced strategy, it's not complex indicators. What they want is to be able, for example, to offset large positions with the less impact as possible on the market. So they use the tool to split the order within maybe 100 different orders, so they can get a much better execution. This is a very important theme still in the crypto market, because the market is very fragmented. So if you want to trade Bitcoin, you have thousands of ways to trade it, and this is very powerful.
But like you rightly said, Ruben, coming on to like you mentioning reserve orders and mentioning orders breaking down in size to be put and filled, like these kind of opportunities at this moment are not in the whole DeFi ecosystem. So Daniel, like how do you think like large orders on the DeFi, the slippage is maintained automatically, right? And a lot of protocols do have a lot of slippage if you want to sell huge quantities from that pool. So I would like to know more from you and U-Zyn on how for big quant hedge funds, if they're entering and taking positions in crypto markets and decentralized finance markets, like how do they manage this, and how do they manage the risk of losing their capital transacting into the other asset?
Yeah, basically, the way to make it work is very similar to the centralized exchanges. So you need to scan for the liquidity of many different pools, so that as soon as you have enough liquidity to execute your order, you can route the execution through these venues. It's even easier probably in a DeFi space, because you can see in real time liquidity on the chain. So in traditional financial market, we have dark pools where you basically don't know what is going on. On the DeFi space, instead, everything is transparent. So it's even easier to build the tools that can exploit these opportunities.
Absolutely. Like U-Zyn, you wanna say something on this?
Yeah. I think like for DeFi space, like everything is open. There's a ton of opportunities, but there's like you rightly point out, there's some risk as well. Like the slippage that's if you see an opportunity, someone else might see it too, and someone put in an order earlier than you, or you get to mine earlier than you, then you will be subjected to slippage. Or if you set a wide slippage protection, then you're gonna get a lower worse price than you originally intended to. So that's gonna be bad for you. And on top of that, like DeFi, it's not all like roses out there, especially on a virtual machine on the Ethereum side, where Like there's protocol failures and there's smart contract bugs and rug pullings and all that. Where it's been happening like every other week that we hear in the news. It's really unfortunate. And like gas fees, you got outrun by gas fees and eat up your edge that you managed to figure out. Yeah. So that's why like on our side, where my team is doing a great work on DeFi chain, where we're doing away with the smart contract part. Everything, all the financial transactions on the lowest level, on the consensus level, where there's no risk of smart contract, there's no risk of rug pulling and all that. So
Yeah.
yeah.
All right, awesome. So, Danielle, like from your experience and now entering into DeFi markets, do you think institutions have taken positions truly in the DeFi markets? And if so, like how did this market go suddenly from a few $1 million to a few $1 billion now, closing in fastly towards $500 billion. So like how do you think still we managed to see 5%, 3 to 5% normal slippage in liquidity pools that are about new projects, and anywhere between 0.5% to 2.5%, 3% slippage on various pools. But if big orders come in which are algo based or quant based, how do you look at these situations, and are you entering in these markets?
No, honestly, we are not entering right now. We are exploring. But if you provide a quantitative strategy, there is a ton of detail to take in consideration, and U-Zyn correctly explain most of them. And if you wanted to have a quantitative methodology that work not only in the back test but in the real life, you have to take care of this detail, the risk, the impact, and the slippage is only one of these. And in this moment we are studying it, so we are not actively working. We continue to work in different exchanges in a basically centralized way, not a decentralized way.
Yeah.
And because most of the algorithm that we use need to exit very quickly, and we for the moment we prefer to follow the traditional way in the exchanges.
Absolutely. So as we also have a little bit of time constraint, I'll start off with Edul. Edul, some remarks or closing remarks from your side.
Absolutely. So I think one thing that we didn't touch on that I wanted to talk about is how do people manage risk in a better way? Because what a lot of times gets just spoken about is the returns, but no one talks about what's the risk that someone took to give you the return. Right? And that's one key focus area that we are focusing on while we are providing algos to our users. And that's also something that I would recommend most people to ignore, because at the end of the day, the better you manage risk, the better your returns are. It's more important to safeguard the money you've made than to get more. I think Danielle would double down on that. So that's my kind of sort of closing remark. That in quant, it's not only important to be the best and the fastest, but also important to protect what you have and continue to grow that.
Thanks, Edul. Thanks. Moving on to Ruben, like anything that you would want to add on to like risk is something which Edul said. Anything that you think people who are wanting to enter a quants as well, how they should be looking at towards it when they're wanting to start off with this kind of a career or the skill set.
So yeah, I think that Edul also made a good point before when he was mentioning the fact that I think an algo in place means to stick with a trading strategy. So that means that taking out everything which are emotions brings you to focusing more on the result and managing the risk. So definitely, I would recommend the people to start digging more into automated strategies. because only in that way they can actually manage better their risk. Another point that I would like also to add, which was not mentioned, but I think it's important for the whole crypto space at the moment, is the correlation that exists between coins, crypto assets in general, which is becoming more and more a theme as the space develops. We witnessed, for example, in 2018 when the market crashed, all the coins crashed. That meant that there was a very high correlation between all the cryptocurrencies. This is something that we are seeing as an element of that it's decreasing in the market. So especially large investors, they are doing more fundamental analysis about how actually strong and solid a project is. So fundamental analysis coupled with a quality of execution, a 24-hour checking on the market, analyzing all these dynamics with how the correlation between the crypto assets change. I think it's a valuable, very valuable strategy.
Yeah, thanks, Ruben. Like you correctly, mentioned the correlation and the damage that it, if everyone was just stay put in crypto, they lost. Some of them lost like 60 to 70% last March, and that's where Daniel said that he only lost 18%. Because they were hedged into other assets as well. So Daniel, what do you want to say as closing remarks, and how would you tell other people to be ready when they're using quants? Like how do we get started? If someone needs to know that as well, if someone's watching and someone needs to know that.
Yes, but I'm not encouraging the people to start to work as quant from themselves because there is a lot of difficulties to create a very good quantitative strategy from ourselves if you don't have a background or if you don't work in a quant company for some years. And so from my point of view, one can start with their own money, making their own error, but create a really good strategy and not fail in the error to make with I don't know, some tools like MetaTrader a good back test, but in the reality it doesn't work for a lot of problem that you don't take care is really difficult. I suppose that just because we are speaking about quant hedge fund, there is a very good quant hedge fund in the field. If and some of them make arbitrage strategy with a very good return, with a very low risk. Someone else, like our fund, is a trend following strategy or momentum, like mentioned Edul before. That can be a lot of strategy, carry trading. But to start from ourselves, if you don't have a huge experience in trading or in writing code, and you have resources, money for storage of the data, to analyze the data, people that work for you, is very difficult to find a very good investment strategy.
Right. Thank you so much, Daniel. Moving on, closing remarks to U-Zyn as well. U-Zyn, what would you like to say, and how do you want to say cakes changing the segment in DeFi?
Cake, it's bringing the whole DeFi space in a very easy to understand manner to end user. Like if you're not a quant trader and you are looking to get yield in the DeFi space and do not mind having some crypto exposure, I mean, Cake DeFi is going to bring a lot of that to you in a very simple to understand manner. So you go in there and look at what risks you want to be exposed to, and what kind of return that you're okay in exchange for that risk. click a few buttons, and you're good to go, and everything's very, very transparent. But for this event, for this conference, a lot of you guys are quant, so I just want to leave a parting note here that on DeFi space, there's a ton of opportunities for quant. If you ignore it previously, do not ignore it, because you are missing out a ton of opportunities on the DeFi space. But if you do that, do understand the underlying technology. Spend some time to understand that. Understand the risk, the fees, and the governance structure, and how it could be manipulated against you, the forks, the smart contract risk especially. And yeah, that being said, do check out DeFi if you're a quant trader. And if you're not a quant trader and you want to be exposed to crypto gains, check out Cake DeFi.
Awesome. Thank you so much, U-Zyn. So Matthew from the audience, basically asked, and I think I'm going to lastly put the question on Edul. Matthew says that obviously excellent advice, but he's a novice in crypto and blockchain. He's looking for programs or apps that you can suggest for a novice crypto trader. So one suggestion from each of you, I think, to close this session off as well. Yeah. And Matthew is going to get 4 options.
Yeah. So Matthew, you should just go to mudrex.com/invest. This is exactly what we built, because we realized that a vast majority of people don't know how to do their own trading. To add to that, we are actually launching crypto index funds in about a month or so, where the idea is that users will be able to just pick and choose different indexes that they can invest and allocate their money in, and we will just redistribute their money for them. So yeah, go ahead, mudrex.com/invest.
Ruben, what's your suggestion for Matthew Brady? As a new person who's entering into crypto trading, he's been investing with index-based funds in the US, but has no or less knowledge of crypto space.
You're muted.
You're not audible. If you can check, if you can turn off and turn on, there's. Yeah, can you? No, it's we can't hear you at the moment. There's a bit of an internet problem. It shows red, but we can move on to U-Zyn. U-Zyn, what do you suggest Matthew to use? As he's entering the market, he's a new entrant. What do you suggest he does for crypto trading?
Yeah, check out our site, cakedefi.com, cakedefi.com. I mean, the whole point of us setting Cake DeFi up is to educate new people into crypto, to help them generate cash flow in a more transparent manner. So we're not a quant fund, but you're making the decision yourself. But we educate you on what decision to make and what kind of yield that you're making there, what kind of risk that you're exposed to. So and then you make the decision, and we make everything very, very trackable, very, very transparent. So,
awesome, yeah. Awesome, U-Zyn. Thanks so much, Daniel. If Matthew Brady came to you and obviously he said, I can give you as a fund manager, but I would like to do it myself. What app or program or software would you suggest him as a crypto trader to use?
It's a very good question, because they have to know a lot of experience in Python, in data storage, first of all.
No,
so
it's not
like
crypto trading. If they just want to do normal crypto trading, no quants, then what should they use?
As exchange, you mean?
Yeah.
He's US based. I suppose that could be good. Kraken, a very good platform to remain US. Coinbase is also good, but is a bit expensive.
Yeah.
And but if he is used to invest in an index fund, he can take in consideration to invest in an active fund that anyway is simple, is a ISIN code, and he can store it in his bank very simple, without worries about to storage the crypto in a cold wallet in the right way, and all the stuff that is related to invest directly in crypto assets.
Awesome. Thank you so much. Ruben, did you get